This month we'll be talking about tax compliance, and we have a professional in the house who will be discussing this with us. So we want to look at the business success side of it. Can tax compliance be said to be a strategy towards business success? And how can you be compliant in Nigeria, our country? So the person we have today to take us through is the CEO of Pillar Craft Accounting, and that's Mr. Bayode. Before he comes up to give his presentation, just some housekeeping rules. So after his presentation, we have the opportunity to ask questions and get our questions answered by our professional for today. So if you have questions, just feel free to type them in the chat box, and your questions will try to answer all of them. If we cannot answer all of them, we can provide answers after the webinar, sending it directly to you, your mailbox. And if you want to give a contribution, maybe an audio contribution, you could raise your hand and we'll mute you. But try to use the chat box more as we can have more interaction there. So just feel free. You can start typing your questions, or as our guest for today presents, you type in your questions. So without further delay, I'll call Mr. Bayode to speak with us this evening on business success, how to be on top of tax compliance in Nigeria. Mr. Bayode, you're welcome. You have the floor.
Good afternoon, everyone. Good afternoon. Thank you very much for introducing me. Today, we'll be talking about the business success, how to be on top of tax compliance in Nigeria. As rightly said, my name is Bayode. I'm an accountant, a chartered accountant. I run a company called Pillar Craft. Pillar Craft is a fully outsourced accounting firm for businesses that are using cloud solutions. We provide full bouquet of service, outsourced bookkeeping, outsourced payroll and personnel management, monthly tax compliance services, outsourced CEO services, and we specialize in some fields, in some areas or sectors, retail, manufacturing, in real estate, in film production. And if you've ever seen a Nigeria Christmas, I actually acted in that film while also being the film accountant for Netflix in Nigeria for that production. We also help a lot of startups in terms of providing them all these services, poultry farms, and then distributor. Now, that is about me as a person and what I do. Now, what are we going to get out of this webinar? First is that we have about 1 hour to get everything done in this webinar. So I'll be spending about 30 minutes speaking, and hopefully we'd spend the next 15 minutes taking questions and answering questions, and then we should be done, and so that we can also maximize the time we have. What are we going to be doing in this webinar? One is that we want to achieve the following. I want at the end of the webinar for you to understand what is tax compliance itself. Now, also, but I'll be illustrating that in about the components of tax compliance and how that affects your business success. And in between, we'll be mentioning tools that will help you in terms of compliance. Some of those tools are what you use on a daily basis. And then we'll be talking about the differences between tax avoidance and then the tax evasion. And then we'll be looking at strategies that can help you towards a very good tax avoidance scheme. Now, this is not an academics class, so I would not be going to how do we define and all that of the different perspectives to tax compliance, but I will mention a bit. Now, for the tax authority, tax compliance is basically how you are complying to tax and how much compliant you are. But from a business owner's point of view, the tax compliance are those things you need to do to manage your risk of complying to taxes. Now, there are basically 4 components that you need to manage to ensure that you are compliant when it comes to taxes in Nigeria. And we'll be going into 4 of them differently. Number 1 is registration with the tax authority. So I was distracted by that pop-up that came. Number 2 is accurate recording and presentation of the fact of the transaction. Now, in taxation, we usually bother ourselves about the transactions and the fact relating to the transaction and the document that supports it. We'll also be talking about that. The 3rd one is submitting tax declaration on time. And the last but not the least is paying your tax liability on time. Now, so what are those issues? Let's start from them. But before we go on to start looking at those components, first, let's look at the context of tax compliance in Nigeria. And the context is, let's even look at those different taxes that we have in Nigeria and how they relate to your structure as a business. As you are well aware that there are basically 3 main structures that you have that you can register your business as in Nigeria. You can register as an individual, maybe an enterprise and all those things. You can register as a company, or you can register as an NGO, which is board of trustee and all that. Now, underneath this, there are different layers of it, but these are the basic 3 structures. And now, this structure determines your exposure to different taxes in Nigeria. For example, if you are registered as an individual, you are exposed to personal income tax laws, but not the company income tax law. But you are also exposed to the VAT Act and the withholding tax, capital gain taxes, and also payee. Now, most times people ask me, what's the difference between the payee and the personal income taxes? Now, the payee is pay as you earn, which is almost what the employee gets to pay, though is also being administered under the personal income tax. But there's an aspect of personal income tax that you should declare all your income by the following year, which we'll be talking about. The second one is if you are registered as a company. Now, as a company, you're not exposed to the company, to the Personal Income Tax Act, but you're exposed to the company income tax, you are exposed to VAT, you are exposed to withholding taxes, capital gain, and then the payee for your staff. Now, NGOs ordinarily, they are not exposed to personal income tax, they are not exposed to company income tax, but they're somehow exposed to VAT in a bit, but that is not too much exposure, but they are usually exposed to withholding taxes, meaning that whenever they do supply, somebody does supply with them, the law says they should deduct withholding taxes and remit appropriately. And they should also file payee, which is deduct payee from their staffs and also file the return. Now, so those are the taxes that businesses are exposed to depending on the markets of where you belong to. Now, also, it's still on the context of it, you also need to understand the tax authorities that you are also exposed to as a business. That also depends on how your business is formed or the structure of your business. If your business is an individual or a partnership and all that, it usually will be exposed to personal income tax, and therefore your registration will be with the state's Inland Revenue Services. You are not exposed to company income tax, but you're also exposed to VAT. VAT means that you need to register with FIRS. Now, for withholding tax for individuals, there's an issue of, like I wrote there, it depends. What depends on the person you are dealing with. If you are dealing with a business that's registered as an individual, it means that you need to remit their withholding taxes to a state. But if you are dealing with a business that is registered as a company, it means you also need to remit their withholding taxes to federal government, which is under FIRS. Now, payee also means that you need to be registered with the state as an employer to file your monthly returns. As a company, you are not registered to personal income tax, but you need to register with FIRS to be able to file your monthly returns and your VAT and all that. The same thing depends on if you are the way you treat your withholding taxes. But even if you are a company, you also need to register with the state to file your employee taxes. Now, for NGOs, you are basically to register with the states for payee and to register with FIRS so that you can, though you are not liable to pay income taxes, the law says you should file your return with FIRS. And recently, FIRS has actually set up a special purpose department that manages NGOs. Now, so those gives you the based on your structure, the kind of taxes you are exposed to, and the tax authority you are also exposed to. Now, so let's go to the first point when it comes to compliance. The first point is registration. For you to deem that you are compliant, the first checkbox that you need to tick off is that you must make sure as an individual, you are registered with your state inland revenue services. The evidence of registration is a TIN number. Now, for state inland revenue services, you have your personal TIN numbers, which is used to identify you either as an employee or as an individual. Now, individual doesn't need to register with for a company, but you also need to register with FIRS so that you can file your VAT on a monthly basis. Same thing with if you are ready, if you have a enterprise, you also need to register with the state as an employer. So this is where the trick of let's use Lagos State as an example. If you're an enterprise, you are going to have a number as an employer, and you're going to have another number as the owner of the company, which is what they use as director's number. In those, sometimes you may have just one director's number that serves also your employee number if you are not getting paid in your business. Or if you registered and your structure is a company structure, on that individual, sorry, I need to mention this. Now, if, for example, you're a partnership, it means that every individual that formed that partnership need to be separately registered with the state inland revenue services, and so that they can file their annual return individually also. If it's a company, the company may not need, the directors may need to register with, not that they will need to register with the state because they need to file their annual returns as directors, but the company itself needs to register with FIRS to get an FIRS TIN number and a tax office that they are domiciled with. Once you are registered, you also now need to register for VAT. Now, registration for VAT usually comes if you are doing businesses that beyond 25 million. Now, what I used to say to people is that because of the way the law is structured, there's no harm in you registering your business as also registering for VAT immediately before you hit the threshold of 25 million. But you also need to register for the payee. That means you need to register as a business, as an employer with the state inland revenue services to be able to file your monthly payee return. Now, NGOs will need to register both for FIRS, for VAT, even though they are not returning VAT, and then they need to register for with the state so that they can also return the monthly payroll return. Now, so that's number one when it comes to compliance. The first box is that, are you registered with the appropriate authorities as an employer, as an individual? The next box is, how do you present your facts, your transactions, and your document that support your tax position? Now, let me state that In Nigeria, we have a self-assessment policy. The self-assessment tax administration policy is that the tax authority deem you to be trustworthy to present your information as accurate as possible. Now, for you to be able to do that, there are basic things that you need to have to prepare your position. Number one, you must have an accounting system. Now, your accounting system, it can be an Excel, it can be a cloud software, it can be a server software, it can be a desktop accounting software. I will encourage you to start by having a record keeping of your accounting. One of the elements of that accounting is bookkeeping. Bookkeeping is keeping all the document that relates to that. So when you are recording, you also need to keep the third-party document. Now, in my experience as a tax auditor or defense person, the major problem most SMEs have when it comes to defending their position is that they don't keep a third-party document. Luckily, some of the accounting softwares actually solve this problem because they do have embedded in them ability for you to upload supporting document to transactions. Secondly, we have the problem, especially in Nigeria, where you deal with a lot of people in the informal sector. For example, Baba Lai, that is your mechanic, that comes to repair the car once in a while. It doesn't come with a bill for you. So you could actually get his handwriting attached while creating those lines that he has said you want to repair. That will validate the fact that you actually repair your vehicle at that particular time. Fourth is that you must prepare a monthly, especially an annual financial statement. This is what tells the authority what your profit is, because your profit is what they call it, company income tax is charged. It shows them what your total amount you expended on your payroll is, which they can use to determine if you are paid appropriate payroll taxes. It shows them the level of your turnover that can make the authority determine the validity of what you have claimed to have paid as VAT. Now, let me also state this, that VAT in Nigeria is actually run on a cash basis now, since the Finance Act, it now runs on cash basis. We don't do the accrual basis before. Now, the fifth that is also very important for you is to get familiar with some basics of taxation. We'll be talking more of this when we're talking around the issues of how to do tax avoidance scheme in place of tax evasion. Once you understand how tax is structured and the basis of taxes, there are some transactions that you deliberately incur so that your tax position can be reduced on basis. And those transactions depend on different taxes. For example, if you want to reduce your payee, for example, the law says if you do have a life insurance, it means the premium paid on that life insurance can be used to reduce your payee. So it means that you can deliberately, even if you didn't want to before, go and get a life insurance so that you can reduce the payee that you are paying. The law also says that if you are contributing to pension, your payee will reduce, so you can contribute. And even if you have additional contribution, it's going to reduce more. So those are the schemes that you can deliberately imbibe into your business operations that will reduce the taxes that you pay. Now, the third one of the line is submitting your tax declaration on time. Now, while you have registered, whilst you have also been keeping your books and all that, if you do not make your returns, both the monthly and annual as at when due, you run the risk of being not compliant. Now, there are monthly returns you need to make, and there are annual returns you need to make. The monthly returns are those returns for payee that you need to make on the 10th. Withholding tax and VAT needs to be made on the 21st of every month. 21st of every month means that, for example, we are now in September, you are making the returns of August in September. So you are paid salaries in August. By the 10th of September, you should file the returns for the salaries that have been, and also make payments for the whatever liability that you must have computed for the payee. Now, please note, I must also say this: paying your tax liability while not returning doesn't make you compliant. The way it's structured is that the two must happen before you are compliant. Now, there is a late penalty on not filing return, and there's a late penalty on not paying, because you can actually do either of them. You can make a return and not make payments. And the law says that when you are making the payment, they will charge you interest on the total amount. I think it's about now 10% or thereabout, and then late penalty. But there's also a late penalty for not filing a return. Now, and then we have the annual one. Then the annual one are like this. Now, for employers of labor, if you have a business, you should file your annual payee by the 31st of January the next year, meaning that by the end of 2022, before the 31st of January 2023, you need to file the annual returns of all the amount that relates to your payee taxes that you must have filed in 2022, which is the total amount that you paid as salary, the total amount that you paid as payee. And usually some of the state agencies will tell you to even show evidence of the payments, the receipt, and then they will do their own return in-house. Now, the second one, which is a personal income tax return, is the one that you individually will file. Having now filed maybe your company income and all those things, to now be able to state your position. In this personal one, your income from employment will be there. Your income from other sources, maybe you collected rent, you collected dividends, and all those things should be there. And then you file on a monthly basis by the 31st of December. Now, I know that most people are not doing this, but this is what the law says. And I will encourage you to also try to do it. Now, but for companies, this is how the law is. Now, again, most times when I'm talking to maybe startups or new businesses, they get this particular thing confused. While the law says that you should file your annual return for new company either 18 months from the date of incorporation or 6 months from the end of the first financial year, the law does not preclude you from filing your monthly VAT return, withholding tax return, payee return. Because one of the things I've met in practice is that startups or small businesses or new businesses take this to mean that they should not also file payee, withholding tax and VAT return until 18 months. And then they find out that they have LRPs charged on that. But if it's an existing company, you have to file your return maximum 6 months from the end of your financial year. Now, there are incentives to if you file earlier, for example. These are also part of those things that you can take advantage of as part of your tax strategy. Now, so let me give an instance. If your company year end is 31st of December 2021, the law says before June 2022, you must file your return. Once it is July, your return is late, and they will start charging you LRP, which is late return penalty, on your return. However, if you file earlier, say you file by February, for example, the law says you can actually apply for instrumental payments to next 6 months. That will help you in terms of your cash flow. So in case you have things like maybe we have 3 million naira as tax liability, if you file by February, you can actually ask the tax authority to give you instrumental payment, and you're paying it in maybe like 6 installments. However, if you are late, they will not give you that choice of filing in instrumentally. It now resides on the benevolence of the tax controller to give you or not to give you. And that may actually hamper the way your cash flow is. Now, having said that, what is tax avoidance? What is tax evasion? I mean, tax avoidance is when you take advantage of the gap or incentives in the tax law. Now, I say to people that Nigerian tax law happen to be one of the easiest in the world from my point of view. I mean, I did a bit of training while in the UK before coming back here, and I see the level of incentive that Nigerian tax law has. Number one is that you can even determine for future sake what your tax rate will be. It's not so in some climes, because the company income tax, the personal income tax usually change every year depending on the budget that was set in that year. But we have that flat rate. I think for the rate we have now, if a business is having turnover below 25 million, that business pays 0 naira when it comes to company for taxes. However, if you are doing a turnover between 25 to 100 million, you pay 20% for taxes. And anything above that, you have 30%. Now, so tax avoidance is taking advantages of some of those laws. Like I said, the laws are based on different tax laws. There is a company income tax law. I can give instances of how you can take advantage of avoidance there. Now, for example, if you actually do a proper planning, you could see how your transactions are going, and you could decide on the conscious of some of the transactions you want to make. While tax evasion is entirely trying to avoid tax illegally. For example, when you don't want to declare your tax return, when you don't want to declare, you hide some of your bank statement from the tax authority, when you don't register for taxes. These are tax evasion schemes, which usually backfires when businesses get caught. Now, what are those strategies that you can set to enjoy tax, to make sure you get the best when it comes to tax avoidance in Nigeria? Number one is setting your tax objective and managing your risk, your tax rate. So it means being compliant, number one, is one of the best tax avoidance schemes as well. That means you're already avoiding any form of penalties that may happen when it comes to your late return or not registering and all that. It means you have removed yourself from any form of maybe best of judgment penalties and all that. The second one is that you need to now understand the sector you're operating, the tax laws that affect your structure, and how various issues are in that tax law that you can use. Let me give an instance. Now, the law says, for example, let's use capital gain as an example, that if you sell a property, an asset, whatever gain is made on that asset, you are supposed to pay 10% tax on that asset. However, if you use the fund generated from that asset to procure the same type of asset in the same asset category, you are exempted from that tax. That means when you are planning to sell, you must usually plan to ensure that the asset you are selling, you are buying another one of it. Say you want to sell a motor vehicle. The idea is that so that you avoid the capital gain tax, you also make sure that you are selling the motor vehicle, you are buying another motor vehicle. The advantage of that is this: you have avoided the tax, and you have also started claiming a capital allowance, which is initial and annual allowance on that particular transaction. One of the major strategies you need to adopt when it comes to tax avoidance is tax planning. Now, I know most businesses don't really understand this and they don't pay a lot of attention to it. But I tell businesses that the way you pay attention to your marketing, to your sales, to your human resources management, pay some attention, if not more, to both your accounting, record keeping, and your tax planning. Tax planning is when you actually consider the tax implication of transactions before you actually incur those transactions. One of the things that we in practitioners face is that by the time the client is bringing the matter to us, the transaction is done and it's already concluded. At that point, there are very little changes you as a tax practitioner can make. Say, for example, let's go back to the example of assets. Now, if you actually do an estimation of your budget in a year, and you see that possibility, I'm going to make 10 million naira profit at the end of the year. You can start by knowing that, okay, if I make 10 million naira profit, if I purchase this required asset, I'll be able to enjoy my capital allowances. Therefore, you can engage that. Two, let me give you an instance. The law says, if you entertain yourself, it is not tax exempted. That is, it's not allowable expenses. But when you entertain your staff in a staff meeting, and it can be portrayed to be a staff meeting, that is allowable. You can also enjoy that. 2, 3, the law says that if you donate to some listed company that are doing particular things that are stated in the law, that you are allowed to claim that donation as an allowable expenses. So it means that rather than if your conscience is there, rather than giving your money to government, so to say, you can decide as, okay, I want to do this donation, or I want to do this CSR and all that, and then you are able to claim the tax benefit of that CSR that you have done in that particular year. So these are strategies that you need to, like I've explained the strategy when it comes to payee the other time, that in case you can do insurance premium, you can do those things that will reduce whatever you are paying as payee. There are different taxes, have different gap in them that you can take advantage of. Now, that is not saying that the authorities are not constantly evolving, especially with the Finance Act, trying to block all those loopholes that there are. But the easiest one is you becoming tax compliant. That will also reduce any form of taxes that you have. So, ladies and gentlemen, I think based on the timing that we have, I've come to the end of this presentation. I know that I must have given a lot of information in this short 30 minutes thereabout, but I'm available to answer any questions on the things I've said. Thank you very much.
Okay, thank you very much, Mr. Bayode. That was some masterclass you just gave us there on how we can be tax compliant. Of course, I know we have questions which we would like to ask and all. So, but before we do that, we just want to go on a short break. We want to play a short video so we can start collecting our questions, and by the time we come back, then we start answering them.
Can accounting be simplified yet powerful? This was the question we asked ourselves before building our accounting model, a model for accountants, not so professional accountants and business owners. Our accounting model has been designed to make bookkeeping and accounting tax seamless so anyone can do it. Our comprehensive expense tracking gives you deep insights into your expenditure as you easily record bills, expenses, and categorize them. Evaluation of business growth over some time based on real-time data from the inflow and outflow report is important. You can see what invoices have been paid, the ones that are overdue, giving you insight into how your business is doing. If running numbers is not your thing, you are welcome. Now, accounting has been simplified for you.
Okay, so welcome back. I would start with questions now. So if you have a question, just place them in the chat box and then we start answering. We have some reserved questions that were sent in, and maybe we start with those ones. Some of us can put some of their questions here and we'll continue with that. Okay, so I have this question for you. It says, some contributors lump withholding tax and VAT together, and they present it to a client to pay. Is this proper? Some
No, it is
contractors, they lump withholding tax.
No, it is not. It is not. So what the invoice should carry, the invoice the contractor is given to the person should carry should just be the cost of the service and then the VAT on it. It is the contractor that bonds withholding tax. I mean, yes, it's the contractor that bonds withholding tax from the cost, not the beneficiary of the business, because withholding tax is actually a credit against the profit that you are going to make. So it is actually wrong. And if you meet that, I know it also causes disagreement between some accountants and some suppliers, because the accountant will remove the withholding tax element and then pay the person the amount less VAT and all that. So, but it's wrong.
Okay. Thank you very much for answering that question. So we have a question here in the chat box from HMB. It says, good afternoon, please. If you registered a business name in January 22, but have not started any business, what do you file and when? A lot of people fall in this category. A lot, you just want to register a business and maybe you are processing some kind of grant, you're just trying to arrange. Okay, so.
Okay, now when you register a business in Nigeria, before now, we had a process where when you register a business, you are not registered for tax. But since we've started to do the ease of doing business in Nigeria, once you register a company, you have a CAC number and also a TIN number almost assigned at the point of registration. However, that does not say your business has commenced operations. The law says when you're about to commence operations, you should now notify the tax authority that you're about to commence operation. But please note, and I want you to be careful concerning this, that means there are no transactions in the bank statement that you have opened. The only transaction that is allowed to be there is what we call pre-operational expenses. There must not be any form of sales and all those kind of transactions in your bank statement. I hope that's clear.
Okay, that's clear, but I have a follow-up question on that. So if the person has opens a corporate account, that's a business account, and has money coming in, but can this person specify the money as donations or maybe capital coming from friends or investment coming from people? Is that allowable?
That is why that's the essence of having a financial statement. Now, even if you have not commenced the business, the law says every year you should file a statement of affairs with the relevant authority. Either it is the state, if you are registered as an individual, or FRS if you are registered as a company, to state that, for example, this company has not started operations, but we've collected this money which is being invested in this area. But you must make sure that you're filing your returns on those bases. But when you're ready to start business, you now write to authority to say, we are commencing operation now.
Okay, thank you very much. That's very clear now. I hope HMB got the needed answer to these questions. So we're still expecting more questions. I have another one from here. It says, should VAT be paid on commercial rents?
Oh, no. So now there's a recent law that exempted VAT from being paid on rent and sale of property.
Okay.
I think I can share that this thing with you afterwards. You can share with
me. Okay. All right. That's fine. Okay. Then another one says this. What are tax holidays? Some don't really get that term, tax holidays, in the country here, especially for small businesses or those who are just starting out. Do we have tax holidays in Nigeria, and which ones are available to us?
We do have what we can call tax holiday in Nigeria. We call it pioneer status in Nigeria, and it relates to specific industries, not any form of industries. So, for example, if your business is into filmmaking, for example, there is a tax holiday available Then when you're into agricultural business, there's a tax holiday available for you for the first 4 years, an additional 2 years and all that, to be able to basically for you to get down into the business. But it is not automatic. There are required documentation that you need to show how viable the business will be and all that in the next 4 years for the tax holiday to be granted. And usually it is granted by Investment Promotion Council that sees all that before it is approved by FRS.
Okay, fine. So you mentioned,
but there's no tax holiday for trading company. Trading, because that's what most SMEs are involved in. But yes, if you are involved in one of the things that's happening recently, which is not being really been so grounded, is the issue of tech space. There's some workings going around on how to give incentives to businesses that are involved in tech, building tech stuff, but it's not yet grounded because most tech space right now, they are not really all, should I say, all in one in terms of all the technology is not in Nigeria. So those are the challenges.
Okay, fine. So you mentioned agriculture and some other specific business, probably mining or
yes,
and the likes. Okay. What about incentives for businesses? We have incentives like exports incentives. So we have this issue of, or let's say this discussion going on that we are importing things. So how can businesses enjoy or operate the tax compliance if they go into the export business? And are there incentives that they can enjoy? How can they access or harness these incentives?
Now, for export businesses in Nigeria, number one is that there are very specific laws when it comes to, but all those incentives are actually being managed by, there is a agency called NEPC. They administer everything relating to the export incentive and all that for exporter. But I know, for example, as an exporter, you get subsidies, you get exemptions from profits that you made from exports in Nigeria. So if you actually exported, those elements of the exports that you made is not taxable in Nigeria at all. So that's why, for example, I know that some of the businesses that we work with actually export cashew nuts. And the element of the one that was sold in Turkey and all those things, when the profit is coming in, is exempted for taxes.
Okay, that's some light to shed on that there. We have a question here from Ebon. It says, when filing employee tax, do you also tax bonuses or commissions? That's the bonus or commission the employee earns.
Okay, now these were part of those things that we used to call tax avoidance scheme before now, which was where we had stratified salary structure and bonuses were removed from taxes. But since we started what we call a consolidated allowance, all income enjoyed by an individual is taxable. So to answer that question directly, yes, your bonus, your commission should be taxed. Either it is taxed on your payee or it is taxed as your personal income tax. But if it's your company that is paying you, they should add it to your payee to compute your payee.
Okay, I hope that is clear, everyone. You mentioned while you were discussing minutes ago, you mentioned different kind of businesses, or let's say registrations that people do to register their business. Either it's the one that is a board of trustee, maybe it's just a business name, sole proprietorship, or the one where you have partners coming together. For NGOs, there's this misconception, or let's say people are not getting it right. For NGOs now, we have some NGOs who do business. They are NGOs, but they also kind of make some money. And we have NGOs who strictly don't do business. So what's the difference when it comes to their tax filing here? And what can they do to get it right? Because some have found themselves in the, well, I say the well of tax schemes and late payments, and the FRSA on their neck telling them that you are making money, you didn't register this way, and so can you help us clarify that area?
Okay. Now for NGO, the law says that every area that relates that the NGO is doing that is non-profit is tax exempted. But if that NGO perchance goes into anything that is profit making, it should be reported as under Company Income Tax Act. So let me give you an instance. An NGO that collects donations, and this is a very tricky one, which I actually defended recently. An NGO that collected donation now invested that donation in a money market and now made return on that. The law says, though the money started from donation, the moment they went to invest it, right, they need to declare that as a income and report it as under company income tax. I've also seen the situation where a church rents out part of the church premises to individuals. That will be deemed also as going into business, and therefore they need to separate it and show the money received from tithes and offering, and then the one that is from the business angle, so to say, they need to report it and charge taxes on it.
Okay, so if a religious organization now, in this instance, maybe people give their property and put them as trustees, and they end up doing business with it, are you saying they have to pay tax on that?
Yes, they have to pay tax. So if somebody gives the church a building, for example, the person is donating the building to the church, and the church can use it in doing its own activities. But the moment the church rents it out to a third party, it can be deemed that the church has gone into a business of rentage. Therefore, that particular aspect will now be deemed to be a business, and they need to, even it's so thing that, for example, if the church, if I'm using church as an example, it can be any religious organization, it can be a mosque, it can be anyone. If you write a book, I mean, most pastors fall into this category. For you to deem that book is non-profit, you need to show FRS that the total cost of printing that book equals the total amount that you made from that book. The moment you make additional 10 naira from the book sale, you need to declare that this is the total amount and then pay the profit, I mean, the taxes on it appropriately.
Okay, that is very fine. We're running a poll at the moment, so we can just fill it within a minute, and then we'll continue with our questions. We have this question here too that says, do I need to keep receipts if I pay for things with the business account? Maybe personal purchases, and also, for example, someone who runs a one-man business, one-man show. So should this person keep receipts of his personal purchase? And what's the implication of not keeping receipts? How does this affect the whole tax thing?
Now, so when you don't keep receipt, will the first part of the question is, will the supporting document, which is the bank statement, suffice for tax authority? Now, however, when you don't keep those receipts, you are giving the tax authority the liberty of disallowing those expenses. The receipt verify, authenticate, add as a follow-up document to show that, yes, I paid for phone, and you can see MTN, but this is a receipt that shows that MTN actually collected money from me, and therefore becomes a valid business transaction. Though there's also that argument that, is it rent, which is what we call, is it only reasonably incurred.
Justifiable.
Is it justifiable? That's another level of discussion when it comes to tax offense. So, for example, like we just said now that, we said that entertainment of staff is allowable expense. That doesn't mean you should now have a grounded party, bring whiskey and spend 20 million and say, we're just having a staff party. And then you expect them to approve it. You know, they start asking, okay, how does that affect your business and all those kind of things? So, like I said, the third-party document helps your case when you are filing your return so that your allowable expenses are not disallowed.
All right. Do we have any more questions, please, as we are about rounding up in the next few minutes? If you have questions, put them in the chat box. If you don't want to chat or find it hard, type in, just indicate by using the raise hand button, and I will mute you from here, and you can ask your questions, as we still have Mr. Bayode with us. So I just want to ask, ask this question. Do you have any advice for someone who is going into the business, just starting a business? What financial advice will you give this person as regards registration? Should he come out as a sole proprietor? Should he make it limited by guarantee, or should he go the NGO route and whatnot? What advice would you give someone who wants to go into business, just starting up a company, and shouldn't face the whole tax issues and the rigmarole of all of this?
Unfortunately, that answer is not, should I say, except to understand what the business the person wants to do, what is the trajectory the business is going to be in the next 5 years, what do you plan to have for the business, how are you even structured at the moment? Why did I say so is this. There are a lot of burdens that fall on companies in terms of returns and all those things that doesn't fall on an enterprise. There are some things that is, depending on where you are located, that you can get away with when it comes to an enterprise, but yes, you can get away with an enterprise, but you cannot get away when it comes to a company. So we need to first understand those things. And truth of the matter is that if, for example, the trajectory that you set is you want to build finance in the next 2-3 years, hardly do these other investors invest in enterprise, because it's almost as if they're investing in your personal person and all that. So these are some of those questions that needs to be answered before we can actually advise, this is the best structure for you. Now, there are some structures that there's nothing you can do about it. If, for example, you are starting a law firm, you may actually have to start as an enterprise, or an accounting firm. You may actually start as an enterprise. So we in Pillarcraft, we actually structured as a company for our own reasons, because we do support businesses across Nigeria. And in fact, it's also part of those things that you learn to now do, that because we support businesses across Nigeria, withholding taxes are deducted from us across Nigeria. And when we're registered as an enterprise in Lagos, it means when they deduct withholding tax from us in Kano, they find it very difficult to remit it to us in Lagos. You understand? So, but now you can remit our withholding tax to us from anywhere you are in Nigeria. So you need to actually look at your objective and your business operations to determine how you finally be structured.
All right. Finally, before we go, the 25 million threshold. This is just last question. Does this define the state of one's business, registration of one's business? So if one starts as an enterprise, but he's making the 25 million naira profit, does it need to go up?
No, it doesn't. It does. So it doesn't. So the 25 threshold is part of the incentive to grow the SMEs. Now, the SMEs basically supposedly, if you are doing turnover, now the word there is turnover, it's not profit. If you are doing turnover below 25 million, you can be registered as an enterprise. You can be registered as you can be registered as a company, because if you are registered as an enterprise, this is also where the issues are. If you register as an enterprise, you are being taxed as an individual, not as a company. So the argument that you didn't make any profit may not really sit well with the National Revenue Service. But for companies, if you have turnover below 25%, 25 million, you are to pay tax of 0%. So even if you make profit, right? If you have 25 million naira turnover and you make a profit of 10 million naira, you are paying 0 naira as tax.
As a company, not as an enterprise.
But you know, if you are registered as an individual, that profit is taxable under Personal Income Tax Act, right? However, please note that most times, and that's why the issue of if you are making profit, usually FIs will come back and say, okay, you should have paid VAT, although the law, there's a gap there. Is it that you are not supposed to pay VAT and all that? But the issues are, because VAT is an input and output matter, it's also a bit of issues when it comes to, okay, if you don't want to pay VAT, but you are paying VAT to people, why don't you just do your tax, your VAT accounting and pay what you're supposed to pay when it comes to the value that you have added?
All right, thank you so much. We really stretched this. It's just 4 o'clock on the dot. Thank you so much, Mr. Bayode, for joining us today and giving us this expose on tax compliance. So please, we'd like to know if your social and how our participants here can follow you. If you can put in the chat box, maybe your social media handle,
okay,
email address, and so they can contact you. So if they have questions that they could ask here, or let's say one-on-one professional advice.
Okay, first, like I said, all my handles are Bayode Agbi. My personal handles are Bayode Agbi on Facebook, Twitter, on Instagram. Is Bayode Agbi, Olubayode Agbi, sorry, Olubayode Agbi. That's it. And if you are wanting to reach me when it comes to officially, Pillarcraft NG on all the platform. But if you want to send email, you can send either to the official line, which is Pillarcraft, contact@pillarcraft.com, or you send to Bayode directly to me, agbi@pillarcraft.com. I can be reached on my phone number. My office is in Lekki, is at Onikepo Akonde, 15 Onikepo Akonde.
Okay. Thank you.
So either which way you can actually reach
very
me.
much. Please let's show some appreciation in the chat box using the clap icon or whatever. Just let's keep the energy buzzing there for Mr. Bayode. Thank you so much. You can just appreciate him there, the claps and all there. We are so grateful for this expose you've given us. This is what we do every month. BizEdge, it's all-in-one business suite. We manage business processes better. We are simple, just like our business owners out there. And we are also very, very active on social media, and you can just search us out at Bizedgeapp on Instagram, Bizedgeapp, Facebook, Twitter, and also on LinkedIn. So next month, we'll be having another interesting topic and also having an exceptional professional with us again to discuss related matter on business management. So till we come your way again next month, I also want to tell you that this recording tool will be available once it's up on our YouTube. The link will be shared to you and also to all participants who are here, and we can watch and learn again, because of course there are some things I was taking notes, but I couldn't take all the notes. So I'm looking forward to watching the recording again myself. So thank you very much, Mr. Bayode, and thank you very much everyone for joining us this evening. So to come your way again next week, let us be tax compliant. Thank you so much.
Thank you, everyone. Enjoy the rest of your day.
Bye-bye.